All right, guys, welcome back for another video. Today's video will be a very short and sweet update to Bitcoin price action. Just a very simple analysis. Sometimes simple is usually the best. So we just had our weekly close, pretty significantly solid down close right by the lows down here. So I want to break it down in the daily structure. So you've got your quarterly open and close right here at July 1st, beginning of Q3. Then you see a change in trend, an uptrend. So we want to mark that off. That's a very significant area. And then, of course, you've got your yearly low down here. So you see price making a pretty orderly downtrend and then breaking the trend right here, taking out this low right here on pretty significant volume right there. There's your break of structure. But again, it's coming down, it's breaking structure and coming down into this historical base right here. And then when you see structure broken on heavy volume, you see the moving averages move around, right, from crossing up to crossing down. There was your sell right there. And then now it's selling down into a golden pocket of the entire retracement, right? If you drew a retracement anchoring at the yearly low down here in June up to the August highs, then you can see price break structure, comes down, gets pushed down by the EMAs down to this golden pocket. Remember, the golden pocket is just below the 618 retracement, so it's not an exact area, but it's an area of interest. And then we see price bouncing there, taking out the daily high. So you could be looking at a intermediate low on the daily here, assuming that the daily does take out the high and close above the high, and then trades a little bit higher. So this is very characteristic behavior, right? I mean, just coming down to a 618, basing there, bouncing. Again, typically one of my methodologies always is to buy the 618 and sell the 382. Again, it's not exact, but it's a lot of times it works out even when, the 618 doesn't, work as a bottom, right? It's not like price will bottom there and then shoot for the moon. But like a lot of times, even if this structure will break down, the 618 will bounce up into the 382. And in that case, that would be confluent with a liquidity run above these highs right here. So a bounce up into the 382 would be running up into this EMA spread, running the stops above this intermediate high right there, filling this gap right there, running into the break of structure right there. There's a lot of confluence right there. Again, so maybe you're looking at the market and you're very bearish on the market itself, and the fundamentals for whatever reason. I mean, you could be bullish or bearish, but wherever you fall, say you're bearish, well, it's still not a great area from a price action standpoint to open a short, just from a risk reward. Really, you want to trade up into the break of structure, say the 22,222 level. So real quick, let me just pull this 382 off the chart. And you can see how this is sort of now assuming that price does base here, close above this daily high, and then mount a rally up above this level. Then you can see how things get pretty fractal, right? Then now that you have your break of structure, now that you have that break of structure, you can start using the the bearish retracements, and you can see how, again, these are not exact levels, but price starts getting into premium. Like the area, if I were looking to open a short, would be in this 2222 level up to roughly 24,444. Again, it's no guarantee that you get those levels, but just from a purely risk reward standpoint, that's a favorable area to open up a short. So maybe we get a run up there, maybe we don't. Again, I feel like I've got a lot on the chart right now. I'll just take this off real quick. Really, what's important to understand is that this break of structure right here, right now the bearish plays are in play. But again, assuming that this area does act as a bottom right there, then this is the premium of this newly established range. The ideal area to enter a short position. There's really no good area to enter a long position right now, just because if you have this break of structure, you would want to see that turn around. And that may take a little bit of time, right? Generally, you don't see a break of structure and then another subsequent break of structure unless volatility is really picking up and getting really incredible. And the reason why it's not really a good setup for a long position is, say this were playing out as like a wyckoff accumulation. You could have a run below these lows right here, right? And then a run below these lows. That'd be very characteristic of a wyckoff, and then close back above. So it's very difficult. And I think, if you are looking to get long, now is the time for patience, and look for structure to build upon itself and ultimately show you what it's doing. So really that's the perspective from the daily. Now, the weekly is just kind of hanging out around the 200 moving average. It's an area where I generally don't want to put on big short positions. Also considering how much capitulation we've seen at that level right there, right here, right there, right there. Typically coming in around the 200 moving average right there. So yeah, that's kind of the reason why I'm not necessarily looking at this daily break of structure and getting excited to open a major short position, just based on the higher time frames. And on the monthly chart, you can see that we got a test of the monthly low. Again, it's not that significant, but if you're just going by the book, theoretically, you are changing behavior somewhat on the monthly, because you're no longer creating new lows yet at this point since June, and you're creating new highs. Again, that can be very arbitrary and can change suddenly, right? We could get a push down below there, but ultimately, if this ends up being a test of the monthly low, rallies back up, that would look okay from a monthly perspective. It would, be a sign that, okay, that buyers are stepping in at this historical level, pushing price up. But again, with this break of structure, it's very difficult to get, incredibly bullish based on price action alone. Now, I had opened a trade on the weekly RSI. So I had opened a position when the weekly closed above right here, right on this weekly close. Actually, a little bit more down here, and I ended up closing that position when price came down and closed below the RSI EMA right here on this weekly close on August 15th. Again, it's it doesn't really spell the end of the world when you get something like that, like an invalidation. But on the flip side, I think conversely, if you do see price reclaim the 200 exponential, these highs, this RSI EMA, I think then it's really not the time to get short. This probably is a significant bottom, and price probably does retrace a pretty good degree of the macro swing and squeeze a lot of the shorts in the market. Anyway, I hope you guys like this analysis, and if you did, just leave a like on the video, subscribe to the channel. I'll catch you guys in the next upload.